Medical Properties Trust stock, ticker symbol MPW. This stock is down 13% year to date, which is an insane drop of course. But since my last video about a month ago, things have changed. Most people love MPW stock because of the dividends, but they cut the dividend not too long ago. And what worries me even more is that there is still no declared dividend for the next dividend. And let me tell you this, it doesn't look any good and it might end up in a full dividend cut, but more on that later in this video. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does MPW do? Medical Properties Trust is a healthcare facility REIT. The company owns and leases healthcare facilities. The vast majority of medical's revenue is generated in the United States. MPW reported a net loss of $1.11 per share and a 0.36 NFO per share. And to be honest, this doesn't look any good. The fourth quarter net loss included a non-recurring write-off, and this is very important to keep in mind. In here we see that revenue went down big time because of the straight line rent and interest. Expenses stay nearly the same. This results in a loss in income and also a negative earnings per share. The dividend was also cut in half year over year. So all of this worries me a bit already, but more on the dividends in a minute. The FFO is reported at $0.36 per share, which already looks much better versus the net income loss. But it is still down year over year, which is something that I don't like of course. And this is one of the most important numbers with REITs. We also see the write-off in here of $0.83 per share. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. MPW is a 2.63 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. Right now it is sitting at 6, indicating they might be undervalued. Later in this video I will show you my 3 price target for MPW stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 871 million, and in this graph we see that revenue went up in the long run. However, most recently it is coming down quite a lot. We see that margins are going up and down quite a lot in the long run as well. But the thing most people are worried about is the most recent decrease in margin. And to me this doesn't look any good. EPS is going up in the long run. It is not really steady and consistent, but that is very common for REITs. However, the most recent decrease is something that of course worries me a lot. Analysis expected in the coming 2 years EPS will recover to $0.91 again. For the revenue it is not looking any good, with the analysis expecting flat numbers from here. Return on assets is sitting at -3%, which is a bad number. Return on equity is also looking really bad. And the most important number, return on invested capital, is sitting at 0.34%, which is a low number. It is also lower versus the 5-year average, so that is also something that I don't like. Current ratio is at 2.26, which is a decent number for a REIT. Nothing special to mention here. Right now MPW has 10 billion in debt. And I prefer companies that can pay down at least a big chunk of the total debt with the total cash. MPW has 293 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. And to be honest, this surprised me a little bit. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, this is where things get interesting. MPW is known for paying a dividend yield around 15% in the recent quarters, which is an insane amount of course. But not too long ago there was a dividend cut and the yield was still around 50% after. But now they have a real problem. Ever since 2005, which is almost 20 years ago, they declared their dividends in the same months, even in the same period those months. And in this screenshot only the past few years are included, but here's a snapshot of 2005. They declare dividends in February, April, August and November. The most recent declared dividend was on the 9th of November, payable on the 11th of January. According to the historical pattern of almost 20 years, they should have declared dividends somewhere in February 2024, but they didn't, meaning there is no upcoming dividend for now. There is nothing mentioned on their website either. In 2023 we see that there is a declared dividend, but in 2024 so far we see nothing. This could potentially mean that we will see postponed dividends later this year. Or even worse, there will be no dividends at all and they cut the dividends to zero in order to survive. And with that being said, how about the historical returns? Was there any value in holding MPW over the past couple of years? I decided to compare MPW stock with the overall market, in this case the S&P 500. On the 5-year chart we see that MPW underperformed the S&P 500 big time, with a minus 67% return, including dividends. The S&P 500 is sitting at 98% return. On the 1-year chart, it looks pretty similar, with MPW sitting at minus 43% return. The S&P 500 is sitting at 28% return. On the 6-month chart, it is again MPW sitting at a negative return. This time you're looking at minus 14%, while the S&P 500 is sitting at 24% return. On the 1-month chart, it is finally MPW that is having a positive return, and they managed to beat the S&P 500 with a whopping 2.46% return versus 2.30% return for the S&P 500, which is a bit pity of course. So bottom line, MPW underperformed the S&P 500 long term. So could this be the perfect time to buy MPW stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 0, 2 and 4%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 36, 38 and 40%. For the free cash flow margin I'm putting in 36, 38 and 40% as well. For the PE ratio I'm putting in 5, 6 and 7. And for the price of free cash flow I'm putting in the same numbers. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5, but I want to build in a higher margin of safety here. And right now MPW stock is at $4.42. I hit analyze and we see a lot of red numbers. And since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $3.15. We have a mid price target of $3.87 and we have a high price target of $4.77. To me, the low to mid price target is the most justified here, indicating that this stock could be undervalued, based on these numbers. What do you think is the most justified price target? Let me know in the comments down below. My final conclusion on MPW is that this is my final warning. Dividends are getting cut, and maybe soon there will be a dividend cut to zero. It is just not worth the risk. So please be careful when you decide to invest in this company. There is a lot of debt, revenue is declining big time, and margins don't look good either. The only thing I do like is the current free cash flow growth. But there are better companies out there that have the same free cash flow growth, so it doesn't feel like a justified reason to buy this stock. For now, I keep skipping this stock and I will closely monitor the dividend situation. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and it did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.